Welcome to Stop Trading Blind. Institutions don't trade blindly based on emotions or stories. They use structure and macro correlation. The cheat sheet will give you a smart money lens across all markets, so you can stop guessing and start positioning like institutions do. It is very expensive to not see what the market is doing. If you've ever sold a breakout or bought a fake out, you know exactly what I'm talking about. And if you have done this, please say I've done this in the comments, and believe me, you're not alone. In this video, I'm going to help you to see the market like smart money and align your buys and sells with institutional risk-on or risk-off momentum. No stories or emotions, just assessments. You'll be able to detect sentiment changes across macro correlation, seeing the big picture. And we'll be focusing on the cheat sheet, which is available absolutely free of charge from CTKSmethod.org. You can download it right there. And there are tons of free resources there as well. Please check them out. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. If you like this kind of content, if you want to see what other people can't see, please subscribe. We have one of the best communities on YouTube. In fact, it is the best. Now, when we look for sentiment changes across markets, we use the cheat sheet. Row 1 and Row 2 are about risk-on or risk-off activity. Row 3 and 4 are the stock market. Rows 5, 6 and 7 are the crypto market. Inside Row 1, we have the Forex market, we've got yields, and also we've got commodities. You are literally getting a macro view across 5 different markets simultaneously. This is really important to do because these 5 markets are intercorrelated and interdependent. For example, a weakening of the US dollar currency index will typically see commodities such as gold and silver increase, stock market increase, and crypto increase. It's very important to understand how things work. But if the DXY goes down, we expect and anticipate bond yields to come down also. And that affects credit rates throughout the entire economy. You cannot separate one specific chart and just look at that chart if you want to see what smart money is seeing. And of course, if you don't see what smart money sees, you're going to find it really expensive over time. This video is all about giving you an institutional edge. I want to help you to predict broader market moves. These market moves do take time to actually filter through the economic system. They filter globally, so gaining a macro context is incredibly important. You can use it to enhance your entries and exits. But the most important thing is to just build institutional level skill. Let's get into the cheat sheet. To download the cheat sheet, just go to CTKSmethod.org. Just scroll down a little bit until you get to your cheat sheet to mastering price action. You can just download it absolutely free here. And there are a lot of helpful videos inside this particular website, so please check them out as well. As all markets are intercorrelated and interconnected, we're going to look at Row 1 and Row 2 through the templates provided in the profiting course. Row 1 is the VIX, the DXY US dollar currency index, the dollar-yen combo, the 10-year, the 2-year, and oil. What you'll notice is that here we've got Bitcoin as this blue line on the back of all of these charts. Now, why do we do this? Bitcoin is an incredibly powerful risk-on and risk-off indicator. Now, what we can see over the past week or so, Bitcoin came down and then it spiked itself up. But if I invert this, what do we see? We see a very tight correlation. In fact, I'm going to invert Bitcoin across all of these charts and let me know in the comments, what do you see that's really standing out? Of course, this video is all about seeing. Seeing is believing. So when we look at the VIX, if the VIX spikes up, we anticipate that Bitcoin will come down. If the VIX comes down, we expect Bitcoin will go up. Now, what's interesting here, look at the rate of descent inside the VIX. It started to curve and to bottom. And when we look at the last trading session, the VIX went up and then it got squashed back down again. That created a lot of turbulence inside the crypto market. A lot of people would say, oh, why is crypto doing what it's doing? It's doing it because of macro correlation. We can also see that when the DXY comes down, it's fueling upward support for Bitcoin. And don't forget, I've just inverted this case. So if I just flip it around, what you can see, and this is all about seeing, is as the DXY comes down, what is Bitcoin doing? It's going up. Understanding how to see these things inside the market is a superpower, and you really need it if you're trading or investing. What can we see about crude oil? When crude oil came down here, what was Bitcoin doing? It was spiking up because don't forget, this is an inverted chart. So if I uninvert that scale, you can see it pretty clearly. But inverting it like this makes the relationship very easy to spot. Hopefully, you're already seeing much more about the predictive power of row 1 and also the cheat sheet. This is institutional grade thinking. It is not retail thinking. Retail thinking goes a little bit like this. I'm putting my life savings into Doge at this price and hope like hell it goes up, or into XRP, or into Nvidia. But there's a big problem with this. You simply can't see what the markets are doing. So let's have a look at row 2. Row 2 is a really interesting row and typically is the inverse of row 1, but let's check it out. Inside row 2, we're looking at junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. And what do we notice about junk bonds? Junk bonds is increasing at the moment, but it's starting to curl over. Now, this is a very important time. We've had a very good move up in junk bonds, like we've had a very good move down in the VIX. Junk bonds and VIX intend to invert each other, so please bear this in mind. When we look at this, what are we seeing? If we don't break up, we have a greater than potential to break down. Now, if we break down, we would expect around that 96.70 area. So it could just be a retracement before we continue on. But the thing to remember is that the VIX has come down and been basing. Does this mean that prices can't go up? Of course they can go up, and we have three-dimensional thinking anyway. We know price is just always moving in a wave. Even in an uptrend, it can come down 20, 30, 40%. Especially inside crypto. But we look at these correlations, so we can see junk is coming up and had taken a hit in the last trading session. We saw that with the VIX spiking up, junk bonds spiked down. What about gold? It's selling down. Now, what does this tell us? It tells us that geopolitical tension is easing across the world. And what about the euro dollar, which is the inversion to the DXY? We can see it's coming up, but is it hitting an area of structure? These are the important things to know. Actually understanding intercorrelation is one thing, but without structure, you simply don't know where the safety levels are and where the ceilings are inside price action. And we can see inside silver, that 3680 mark is a really big doozy for overhead structural resistance, and throughout that 3560 mark is quite good structural support, and we've seen it bounding between structural support and structural resistance up and down all the time. If you simply understand the price waves are created through the interaction of structure, it's a game changer. And we can also see that copper is going for it. So the euro dollar, the Aussie dollar is going for it, and the DXY and the dollar yen combo are both coming down. In order to see more, you actually have to know more. So if the DXY is coming down and it starts to shoot up, we would anticipate devaluation in the euro dollar and the Aussie dollar, but more specifically, we can see that Bitcoin is following the euro and the Aussie. Now, if the euro and the Aussie start to retrace, that's not so good, but if they start to break out, we would see confirmation across the cheat sheet. Hopefully you can see how you need to fit the pieces together. And for students inside the Profiting course, please make sure that you just have a look through week 2, assessing momentum and direction of the cheat sheet components. Here you can overcome directional confusion and independently assess direction. You can also look into predicting tops and bottoms across all of the cheat sheet components and Bitcoin and crypto as well. Very, very powerful stuff. And to see more, you need to know more. The reason that we start with row 1 and row 2 is that we need to stack probabilities for the remaining rows, row 3 and especially row 5. What you will find is that when you understand what row 1 and row 2 are doing, you get a really good interpretation as to what the stock market could be doing coming up. The stock market is very, very slow. Just be aware of this. It takes a long time to turn around. And the crypto market is far, far faster. Looking into row 3, we see the S&P 500, the Dow, the Nasdaq, and also the Russell. We notice that Bitcoin and the major market indices do tend to follow. Now, this is really important. Bitcoin is like literally the thing that can sniff out risk on or risk off inside the market. And we've seen that there's been risk off inside of Bitcoin up to around the 24th, and then things started to party. And when they were partying right across the board. And you know exactly why that was the case, because the VIX dropped, the DXY dropped, the yields dropped, euro dollar went up. You got the idea. If you're new to our global community, a very warm welcome, and this is what CTKS analysts do. We look into this and we understand how all the different markets globally intercorrelate and interconnect, and we make money from it. Because we don't trade with emotion, we trade with knowledge and structure, intercorrelation and interconnection. Row 4 is all about what happens inside row 3's influence. If row 3 is going up, row 4 will be going up. If row 3 is tanking, row 4 will be tanking. So you have a direct correlation between row 3 and row 4. And of course, you know that Bitcoin is the asset class to just keep your eye on at all times. Row 4 is Apple, Microsoft, Tesla, and Nvidia, and row 5 has MicroStrategy or now Strategy in it, but we'll pop it in here because the scales just work better inside this one. So we can see as Apple has been curling over, Bitcoin was also curling over. Tesla was a little bit varied. It actually did a really big pump up and then just dumped. One of the things that you'll find, big pumps often lead to big dumps. That's why we tend to buy on red and sell on green, but it's always structurally related. Microsoft has been an absolute juggernaut. It just continues to grind higher and higher. And Nvidia has also been doing well. MicroStrategy is, surprise, surprise, just following Bitcoin, and we would expect that. Therefore, we can see in terms of row 1 and row 2 and going all the way into row 4, there's a hint across the markets that the VIX could spike up. It in fact did spike up and was squashed down in the past trading session, but we must keep our eyes on all of the components of row 1 and row 2, especially at the moment. If we get that breakout, the VIX can go lower, but it's very likely that the VIX could start to spike up again. This is why we have three-dimensional thinking. Always know that price is always moving in a wave. Even in an uptrend, it does something like that. So if it does something like this and you are not prepared for the downside of that natural wave-like thing that just happens inside price, you'll get shaken out of the market. Also realize that it takes a long time for the stock markets to turn around. Okay, looking into row 5, row 6, and row 7, let's go for it. Looking at total crypto market cap, which is currently 3.29 trillion, we had structural support at that 3.25, and we saw some fairly good price action. A big pump up, a retrace, and also a pump up. Now, this is very good because we're inside literally a CTKS gap now. It is a positive gap and it's also a negative gap, and that's exactly what kind of volatility comes out of these gaps. When you know where their gaps are, it's an absolute game changer because you can ride that volatility to the upside and also to the downside. When we look at Bitcoin, which is currently 108,115, we can see that it's done really rather well. It was around that 107,200, took off, just encountered all of this overhead structural resistance, got pushed back, and now it's seeking to get above this 108,300. But in terms of structure, there's literally not much inside the market at the moment. We're inside a volatility gap, and we must know that's where we are. Looking across to Ethereum had structure at that 2420 mark, and it's bounced like a super ball and is currently nearly $2,500. We have overhead structural resistance around the 2520 mark, and we can see Pepe is currently going for it. What this is confirming for us at the current time, because crypto trades 24/7, but row 1 and row 2 are fairly lazy, especially when it comes to the stock market, we're seeing a bit of risk on sentiment entering the markets at the current time. So even though the VIX is basing, we still may have a potential for more upside. The one thing that's fantastic about crypto, it's always trading 24/7. Now, I wanted to just show you something with Pepe. Last night, for example, Sunday night, Aussie time, I put $50,000 into Pepe here and another 50,000 in here. So this particular, that's just a previous feeler sell. That's just $1,000 sell. So when you look in here, I've been riding these two $50,000 positions up. Even though it got a little bit wobbly, I did this because I saw the markets were changing. And this is what I talk about, three-dimensional thinking. One of the things to always bear in mind when you trade and invest, you must move with the markets. The markets are the final arbitrator of risk on or risk off. And if you can push your trades up, let them run. The reason I shared that particular information on Pepe was because the markets were very, very uncertain, and that's actually where you make the most money, when they're uncertain. Let's have a look at row 6 with the template from the profiting course. We can see Litecoin has broken above that literal 8690 resistance and is going for it. What we see, if Bitcoin is going for it, all the alts will go with it. That's why I always just question people about alt season. I say it's literally alt season every day. If Bitcoin is going up, guess where Bitcoin Cash is going? What about Litecoin? What about BNB? What about Ethereum Classic? They're all going up. Looking into row 7, which is ADA, Solana, Dogecoin, and XRP. One of the things to understand with structure, looking at Solana is currently 152.92. It came into all of this overhead structure around that 154 area. All of the sellers were inhabiting that price, and we knew this ahead of time. And what did the sellers do? Well, they sold. They sold down. They got rid of their positions there, and we've seen this big push down in Solana, but we've not seen the same thing in ADA or Doge or XRP. That's because Solana's overhead structural resistance was much greater. This is why, even though Solana is following Bitcoin's directional movement, it can't escape its own structure as well. And if you were investing or trading inside Solana, knowing where the structure is, knowing where the ceilings are and where the floors are is vitally important. Looking at ADA, which is currently 57.94, it literally came up to this 58.50 level of structural overhead resistance, tapped it and said, boy oh boy, I just got a headache. But not as big a headache as what Solana got. And why is that? Because Solana's structure is much, much heavier. We can see ahead of time, we can see into the future, because these particular levels, called CTKS levels or SLs or Stanfield levels, we look to the right here. So when price was trading down here at 151, we knew that around 154 there was all of this overhead structural resistance. You've probably always thought, why does one thing move up much more than another thing, and why does something come down? The answer is structure. You're already seeing more than 95% of people see. Please let me know in the comments, did you have any aha moments or something clicked more than it has previously? And don't forget, if you haven't got the cheat sheet yet, just pick it up free from the homepage at ctksmethod.org. When you're starting your journey with CTKS, it can be a little bit overwhelming, but this is how institutional traders and investors think. If you want to profit like smart money, you have to think like them as well. And please let me know inside the comments, what do you think of the cheat sheet components and where do you think markets could be going in this shortened working week? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.